This interview is brought to you by OKCoin Crypto Exchange, where you can buy, sell, and trade your favorite cryptocurrencies, and you don't have to pay high fees. OKCoin charges low fees, the lowest in the industry. You can also stake your crypto and keep 100% of the rewards. OKCoin does not charge any fees when it comes to staking. In fact, it is the only exchange where you can buy, sell, and trade Miami coin and also stake Miami coin at a high APY, currently at 280%. OKCoin also has a great referral program that if you refer a friend, you guys can split $100 in Bitcoin. So be sure to sign up with OKCoin, link in the description.
Hi, everyone. Welcome back to the Thinking Crypto channel, your home for crypto news and interviews. With me today is Alessio Quaglini, who's the CEO of Hex Trust, and Robert Alcorn, who's the CEO of Clearpool. Gentlemen, it's great to have you both on.
Thanks, Tony. It's great to be here.
Let's start with you, Alessio, and Hex Trust. Obviously, we've spoken in the past. You've been on the show about 2 times or so. And for those who don't know about Hex Trust, can you give a quick overview of the company and its services?
Sure, absolutely. So Hex Trust is a digital asset custodian and infrastructure provider. We've been in the market for almost 4 years, and we are a licensed company in Hong Kong and Singapore. We provide mainly custody services and blockchain native kind of custody related services such as staking, governance, delegation services to basically businesses that operate in the digital asset space.
And can you tell us a bit about the type of clients you're working with? Clearly, they're institutional, and maybe how much assets under management you have?
Sure. So we only target institutions and in a very limited way, family offices, corporations, and some high net worth individuals. We usually divide our clients into 3 main categories. But on one side, we have all those traditional financial institutions that are progressively entering the digital asset space. So we're talking about banks, traditional insurance companies, traditional asset managers, even central banks. We are reading every day in the newspapers and the news, new traditional financial institutions exploring their first steps into the space. The second vertical is digital asset natives. So we're talking about companies that were born and set up to operate in the digital asset space. So we're talking about exchanges, brokers, digital asset hedge funds, as well as token projects, foundations. And the last category is what I mentioned before. So corporations that are kind of diversifying their treasury assets into digital assets, as well as family office, multifamily offices, and some selective high net worth individuals. The second part of your questions, the question in terms of total assets under custody, we're just exceeded $6 billion.
Wow.
So we're very proud of this achievement. It's really a milestone that proves our very quick growth in the past 12 months.
Yeah, absolutely. So it sounds like growth has matched maybe the trajectory of the crypto market as the asset class has grown. Have you seen more demand from these different types of institutions?
It's unbelievable. It's the demand in the past 12 months is kind of it's really hard to keep up with. We're seeing, obviously, okay, if we really want to segment it into the 3 categories that I mentioned before. So in the traditional financial institution space, we're basically seeing every single bank, major bank, tier 1, and even we're getting into the tier 2, exploring that we're exploring the blockchain, the digital asset space in 2020, basically taking the first steps into the blockchain space in 2021. So we've seen RFPs, we've seen RFIs, we've seen, obviously, not anymore proof of concepts, but really traditional financial institutions looking for real solutions to start offering services to their clients. I think Asia has been ahead in some of these aspects, but we've seen financial institutions in the States and in Europe also basically leading this kind of thing in their business. In the digital asset native, sorry, you're asking a question?
Oh, no.
Sorry. In the digital asset space, basically it's every day, a lot of businesses basically kicking off new activities. Obviously, lots of exchanges, and usually the new exchanges, they're lighter in terms of infrastructure, so they rely more on custodians rather than building their own infrastructures by themselves. We're seeing lots of brokers, new asset managers coming to the market every day, and obviously a numerous amount of token projects following this kind of very good cycle for the digital asset classes. The last category, corporations, with an increasing number of corporations entering the space. If they had not done it before with digital assets and cryptocurrencies, now I think the Metaverse and the NFT is basically kind of bringing into the space all the other players that have not taken the first step.
That's exciting, and congratulations on the growth. Once again, since we last spoken, it seems like a lot of things have your assets under custody have increased, and you probably have much more clients. This past year, there was some news of funding rounds that Hex Trust received, and I have here $6 million led by QBN Capital in March, and $10 million led by Amica Brands in October, and also an investment from Ripple. Can you tell us about those funding rounds and how the capital will be used?
Yeah, sure. So the Series A was really at the beginning of this year. 6 million, you rightly said, led by QBN Capital, and we had a lot of blockchain names participating in this round: Kinetic Capital, Hashkey, Bamboo, et cetera. Well, that was our first really real institutional round. It really helped us kind of, I would say, start building and scaling our infrastructure and being able to put ourselves as one of the leading players in the market. The second round that you mentioned is a round that was, I would say, a little bit more market driven. So basically, as soon as we closed the Series A, obviously the market had eaten up quite a bit, and we had quite a bit requests to extend the round, which we didn't want to do. But then in the end, Animoca Brands, for those who are not familiar with the name, is basically the leading player globally, probably in the GameFi, in the decentralized gaming, blockchain gaming, and is also the company behind important blockchain platforms such as Sandbox. So they basically proposed that we would join forces in a joint venture and accompany this whole transaction together with a substantial investment into our equity. So we basically arranged this round in the last summer, and which led to an additional $10 million funding, as well as setting up a joint venture to capture the opportunity of basically offering institutional, professional, kind of enterprise grade, I would say, services to gamers in the NFT space.
That's exciting, and congratulations on those funding rounds. It's great to see that the growth that you're receiving. Now, last time we spoke, we had touched a bit on R3 and Ripple and so forth. Are you guys doing any type of partnerships or work together that you can disclose?
Yeah, so Ripple was one of the investors in this latest round of latest 10 million round. So we are working on a number of initiatives with Ripple, and we're really, I would say, reinforcing that partnership. So obviously that there are things that we can do together in terms of direct commercial relationship from a custody perspective, as well as additional financial services. On top of that, there is, I mean, as you know, Ripple as a company has access to a lot of financial institutions in terms of the cross-border payments, etc. So that's an area where we really want to focus and bring our services into the picture to make sure that we can collaborate with them and provide a more comprehensive service to their clients. And then the other aspect that I wanted to mention is that we also closed a partnership with Wrapped.com, right? We basically became the sole issuer of Wrapped XRP, right? So as a exclusive primary issuer, basically users of the token will be able to use our platform in a institutional way. So basically going through KYC and be onboarded with Hex Trust, and they will be able to access Wrapped XRP. We'll be also the sole, the custodian to safekeep the underlying asset, XRP. And in this partnership, Wrap.com will serve as the technology provider to unwrap the Wrapped XRP. And this will be done based on these partners that Hex Trust will provide. We're very excited to do this, especially because, I mean, obviously there has been a real movement towards basically DeFi and how to DeFi to those blockchains that were not designed at the beginning to be DeFi compliant, right? So we're really excited to bring XRP to the DeFi ecosystem.
Yeah, that's exciting. So for sure, it seems like it will be, of course, XRP and other assets that are wrapped as well, right?
Well, XRP will be the first one,
okay,
and it's already up and running. And then yes, we'll work on additional. Actually, we're already working on other assets. But yes, I think XRP has that kind of a pedigree, that kind of size in the market that would really make a difference for us and for the value that we can add to the DeFi ecosystem.
Got it. That's exciting. Now I want to segue into Clearpool, and Rob, we'll get to you, but I'm curious, Alessio, of Hex Trust's move to incubate Clearpool. Can you tell us about that decision and the thought process there?
Yeah, so actually, I know Rob since a very long time. We used to work together in our previous career in traditional finance. And so I'm actually one of the co-founders of Clearpool. And Clearpool really came to life through the discussions between myself and Rob on how we could actually basically look at what we are doing in Hex Trust, but look at it from a more decentralized, kind of real blockchain DeFi perspective. Right? So we looked at which were the areas that had not been yet addressed by the community, and we thought that the credit market, so together with all the uncollateralized loans, and together with the money market, were really an area that was lacking the development of the blockchain DeFi ecosystem. Mm-hmm. So we discussed for a number of months earlier this year, and then eventually we decided to go live with this project. And obviously there is a very important synergy between a platform such as Clearpool and a platform such as Hex Trust, because until this moment, all the DeFi movement has been more or less completely separate from the regulation and what was really going on in the more centralized blockchain space. I think I mentioned it in one of our previous conversations. At a certain point, I see these two worlds so actually, if not converge, kind of live together, right? Mm-hmm. So there will have to be similar regulations that will apply to both worlds, right? And the two types of services, the centralized one and the decentralized, will have to coexist and to improve each other, right? So we've seen also in the DeFi space, the first steps towards including KYC, including some kind of legal aspects to the platforms that are brought to market. So we see a kind of Hex Trust as the entry point for Clearpool to actually tap this huge market, which is the credit and money market kind of instruments, and at the same time do it for institutions in a, I would say, more compliant way. So with that in mind, we thought that there would be synergies, and it would make sense for Hex Trust to actually invest and incubate the project to make sure that it will get the right exposure and access to different investments.
Got it. So you're really, you hit on something there, which I found very interesting, and that is bringing DeFi into a regulated space, given that a lot of it, like you said, has existed outside of that, and you have the infrastructure to do so. And so I think, Rob, I would love for you to tell us a bit about yourself so folks get to know you and how you ended up, co-founding Clearpool, and also, give your perspective on how it works and the services and so forth.
So as Alessio mentioned, we're ex-colleagues. We used to work together at a bank, and so we used to, we'd regularly keep in touch and talk about the markets and crypto. And this idea came about, I mean, exactly as he said. So we sort of threw the idea around earlier this year, and after a while, we realized we'd come up with something that we thought was pretty good. So we went out and got some feedback. The feedback was overwhelmingly positive. So at that stage, I decided to quit my old job and move full time into this space and start Clearpool. So before that, I was a trader at a bank. I've been working for 12 years in global financial markets. Worked pretty much around the world, but for a long time in Hong Kong along with Alessio. And then it was actually in Singapore when we started Clearpool, which was, I think, back in sort of April, May of this year. So it's been pretty crazy 6 months, but it's been very, very, very good. And yeah, we're almost there. We'll be launching the product in January. It's going to be on the testnet next month. So it's been a great start.
And what do you feel is the differentiator of Clearpool versus other protocols or DeFi protocols?
I think the main thing is, when we started this project, of course, one of the main problems that we wanted to solve was over collateralization in DeFi lending and borrowing. So I think, Alessio knew that this problem existed because, he's got clients in Hex who came up against that. We did a lot of research, realized, that was a pain point for a lot of borrowers in this space. So that was one of the problems that we wanted to solve. But by doing that, we wanted to sort of like make sure that we weren't just solving the problem for the borrowers, but we're also doing something for the lenders as well. Making a solution that was sort of more attractive for the lenders as well. To solve the problem of over collateralization, you kind of have to introduce counterparty risk. So if we were going to do that, we wanted to make sure that we presented a solution for lenders whereby they could manage that risk, monitor it and manage it and hedge. So that's really is the differentiator. That's what sets Clearpool apart from what's out there already. So we've introduced single borrower liquidity pools. So the borrowers on Clearpool will all be institutional borrowers. So in the beginning, it's mainly like crypto trading firms, crypto hedge funds, trading desks. So they're the borrowers. So essentially, that's kind of like a little bit more centralized in the beginning, but on the other side, anybody can be a lender. It can be also institutional lenders, but it could also be individual lenders as well. So we have the single borrower pools, and then what that allows us to do is basically create this system of tokenizing credit. So we've got a single borrower for each of the pools, obviously multiple lenders. And when you lend into that pool, you receive a token, represents the liquidity that you've supplied to the pool. That token also accrues the interest and the rewards that you receive for lending. But it also represents the risk profile of the borrower. So that's quite important because as I mentioned, it's kind of like tokenizing the credit. And on the back of that, we can then start to introduce some risk management tools, which really helps the lender. As I mentioned, this is unsecured lending, so you need to be able to manage risks effectively. But it also will attract new lender profiles into this space. At the moment, it's very, very much sort of like crypto centric in terms of both borrowing and lending. But we really think that introducing that sort of level of sophistication in terms of risk management and hedging will start to help us attract more institutional lenders into this space. And this is again where our partnership with Hex Trust is really strengthens our value proposition there.
For sure. I appreciate that overview. Tell us a bit about the tokenomics. I noticed there's a C-Pool token. Can you tell us about the supply and the staking that's involved with that as well?
Yes, the C-Pool is the governance token for Clearpool. So we launched the token at the end of October. At the moment, there's a staking program on the 3 exchanges that we're on, which is KuCoin, Ascendex, and Gate. Effectively, what we wanted to do here was to reward our sort of like our early adopters, for being members of our community early on. So we've got quite a high APR on the staking, single token staking on those exchanges, 100% APR at the moment there. And we also have the Uniswap V3 liquidity mining program. So that's actually much higher. I think that's sort of like at the moment around 650, 700%. There was as high as I think 1200 at one point. So there's been a lot of interest on that as well. And these are really just sort of like the pre-launch staking programs. So once we go live, C-Pool essentially will be like any other governance token. You can think of it like Compound's comp token, but essentially we're structuring it so that when you are staking C-Pool, the more of it you're staking and the longer you're staking, the higher the rewards will be for you when you interact with the protocol. So for example, it'll be the C-Pool holders that will whitelist the borrowers onto the protocol. So they will have to vote, whether they want to say yes or no when a new proposal comes from a new borrower, and they'll be rewarded for doing that. So if you're staking, the rewards will be higher. If you're staking for longer, the rewards will be higher. Same thing for normal typical governance voting. But also the main thing is for the LP rewards. So when you lend to one of the borrower pools on Clearpool, obviously there's the interest for lending. But in addition to that, there's also rewards paid in C-Pool. And again, those rewards will be higher if you are staking C-Pool in the first place. And as I mentioned before, the more you're staking and the longer you're staking, the higher the rewards. And that means that lending on Clearpool is really going to be one of the most attractive venues in DeFi. Not only have we got very reputable borrowers already lined up to open the first pools, companies like Wintermute, Amber, Folkvang, and a lot more to come. So you're lending to the top sort of like crypto trading companies, and you're getting paid higher interest rates because it's unsecured, but then you also have the additional C-pool rewards. So it's going to be very, very attractive venue for lending in this space.
Oh, that's awesome. And which assets will folks be able to borrow and lend? Would it be like Wrapped XRP and things like that that could be borrow and lend and so forth?
So we're beginning. We'll launch with just stable coins. So right now, the smart contracts have been deployed to the test net already. We'll have like a version that will be able to be tested by members of our community and our investors in a couple of weeks. That version is really just with USDC. We are talking to a number of potential partners whereby we might, when we launch in January, we might introduce other stable coins. Shortly after that, I'm sure definitely will be more stable coins, but ultimately could be could really be sort of like many different crypto assets. So potentially, yes, if there's demand for Wrapped XRP, for example, that definitely can be done. There's really no limit, but I think again, this is just going to be a governance matter. It will be down to the community to vote and decide which assets they want the protocol to support.
Got it. And tell us about security, because we're in DeFi 1.0, and you may be building DeFi 2.0, and a lot of folks are still maybe a bit concerned because they've seen certain hacks. And I'm curious what steps Clearpool has taken to mitigate such risks.
Well, we have, so again, the partnership with Hex, it gives us two things. Obviously, they're custody experts, right? So safekeeping of assets is one thing, and they've been very helpful on that. So that they're going to be helping out with custody and transaction monitoring, which is going to mitigate that. I think it's a good point also to touch on the regulatory aspect as well. That's something that that Alessio mentioned. We know that's coming, and we want to be sort of one step ahead on that. So we have measures in place to make sure that the borrowers, that we can verify their identity, we can verify that a level of KYC has been done with a regulated entity. So there's that kind of eliminates fraud at that level. And then really it's just about smart contract security beyond that. Of course, our developers, this is their number one priority. We have two separate audit companies who will be auditing the code in December. We may well go with a third as well. There'll be a bug bounty program. So we want to make sure that there's no vulnerabilities before we launch. So we're spending a lot of time and a lot of money on that side of it. And then I think beyond that, there's potential insurance, DeFi insurance that we can integrate. We're having conversations with these sort of like DeFi insurance companies or protocols at the moment, and we'll see if we can also do something on that side as well, which will give that sort of like safety net or extra layer of protection for our users. But all together, all combined, this is really one of our sort of like our top priorities. Safety of user assets is really number one.
And recently, you received a round of funding, $3 million, which included Sequoia, Arrington Capital, obviously Hex Trust as well. Can you tell us about that funding round and how the capital will be deployed? I'm assuming it's kind of the things you just mentioned.
Yeah. So back in June, I think it was, after Alessio and I had sort of combined to sort of write the first version of the white paper. And we started to go out and get some early feedback. As I mentioned earlier, it was very positive. So we decided to do the seed round back then. It was at a time when the market was crashing, and and we actually opened and closed the round in a couple of days. It was we were oversubscribed already for that round. So that was back in June, and then we kind of opened the private sale around sort of like August, September time. And yeah, it was just, again, the interest was overwhelming. It was quite a small round. Altogether was 3 million. We were massively oversubscribed. So it's a luxury position to be in, to be able to be in that situation where you can kind of basically choose your investors. And that's kind of what we did. We had a lot of conversations with a lot of people, and we're really happy to have the names that we have on the cap table. They've all been very helpful in different ways, and that's what we wanted. We didn't want to just get them because they're good names. We wanted to get the guys that could bring something to the table, and they all do that in different ways. So we're very happy with the investors. Initially, we were going to do the private sale in 2 separate sequential rounds, but ultimately, because the interest was there, was so high, we closed it all out together. So that was at the end of September, and then we moved on to the public sale in October, which was held on DAOmaker. And for the use of funds, exactly as you said, obviously the majority of it is going to be on developing the protocol. We have to also use some of it for marketing purposes, but we have some tokens set aside for that as well from the treasury. But the bulk of it will be on developing. There's a lot more to come. We have January will be the MVP. Most of the basic functionality will be there, but we have a lot of ideas of where we can take this. The basic version it's not basic at all. It's actually quite sophisticated. We have dynamic interest rate pools. We have thematic pools, which will come slightly after the launch. So there's a lot of very good stuff that's coming straight away. But after that, we have ideas for decentralized derivatives. Potentially, we can in the future launch products that look a little bit more like traditional bonds, with fixed maturity dates and interest rates. We're looking at potentially introducing like novel ways of collateralizing loans through Hex, with potentially even using stuff like NFTs as collateral and things like that. So there's lots of things that we're looking at, that's really where the money is going to be spent.
That's exciting. I'm looking forward to the launch in January. Which markets can or will it be available in, and markets and regions? In terms of borrowers, as I mentioned, they're going to be KYC'd. So that's coming through initially with Hex, but ultimately we're working with a lot of the sort of like the major digital asset custodians. And so there's not really, much of a restriction there. On the lender side, it is permissionless. So anybody really can connect, with their Web3 wallet and lend. It's a good question because it's kind of with the legal people right now. Do we need to restrict certain jurisdictions? So we'll have to come back to you if there is any restrictions. But the main thing for us is that we want to level the playing field here. We wanted to create a platform where anybody can participate in the upside that lending to these type of institutions can provide. They are very successful. But they need capital to execute their strategies. It's a very capital intensive business that they're in.
but the risks actually are relatively neutral. So we wanted to level that playing field and not just open it up to institutional lenders, but so that, and to give anybody that opportunity to be able to lend to these guys as well and participate in the upside. So that's the main thing for us. We want to open it up to as many people as possible. But of course, we have to listen to the lawyers. And as I mentioned earlier, being on the right side of the regulation is also very important to us. This is a long-term project. This is we have a long-term vision, and we know that being compliant is going to be a part of that. So that's also something that we spend a lot of time focusing on.
Got it. Yeah, that absolutely makes sense. I want to switch gears here with a few more questions on the crypto markets, specifically. Maybe Rob, you can go first, and then Alessio. What are your thoughts on the crypto markets growth? Do you feel we're still in a bull market, and do you have a Bitcoin price prediction?
I think we probably still are in a bull market. I mean, obviously, short-term volatility is always going to be there. But I think, crypto in general has now reached a state of mass adoption, you could say. So, it's questionable as to, if we're going to ever enter sort of like a crypto winter per se again, because I think now there's just so much more adoption than what we had previously. And a lot of that is institutional as well. So there's a lot of money in the space now, a lot of focus. So, I think, the short-term volatility will always be there, but ultimately, I think there's still a long way to go in terms of growth. The Bitcoin price prediction question is always a good one. I think we could probably still see, a bit of upside towards the end of the year. I think a lot of guys were hoping for 100,000 this year. I'm not sure that's going to happen, But yeah, we're almost there at the end of the year. But I think maybe we can perhaps get up to the all-time high again by the end of the year would be my prediction.
Alessio, what do you think?
Oh, really? I really agree with Rob's view. So I think in terms of cycle, I don't really see this as a bull cycle. I think, obviously price is going up, but it's going up because a lot of adoption. It's not just price dynamics, it's not technical indicators. It's really newcomers to the space and investors that were already in the space kind of investing more. So I think it's really an organic and healthy growth of the price. If we're talking about Bitcoin, if we're talking about altcoins and second, third tier kind of token projects, then I think it would be a very different conversation. In terms of price prediction, it's very hard. I don't think we'll see the 100K anytime soon. I think it's been an amazing year, and I think like in any other financial product, the investors will starting to take profit before the end of the year, and then probably next year we'll see probably more aggressive, more price dynamics again. But I think at the end of the year, I don't see it. Probably will just it will be in the same range that we've seen in the past few weeks. So it'll be from the all-time high down to around 50 something.
Got it. I want to wrap it up here with the following question for both of you, and Alessio, you can go first. If you could create your own metaverse, what would it be about?
Sorry, if I was what?
If you could create your own metaverse, what would it be about?
Okay. All right, so I've been thinking about, since we launched this JV with Animoca Brands, I've been spending a little bit of time on all the different types of metaverse and art forms, et cetera, et cetera. I think one thing that I was thinking about the other day is that obviously this sandbox metaverse has been really successful in creating scarcity in the space dimension. I think we haven't explored much the time dimension. So I think eventually smart companies will start selling instant of time or something like that, and then you will be able to use for different purposes.
That's a very, very interesting concept, and I think that will do really well if you can create moments in time. To your point, I think people really like that. Maybe I don't know. Let's say you have something there. You guys can probably build on that.
Well, maybe we're already building on
that. Rob, what about you?
Yeah, I don't know. I mean, I think for Clearpool, what I think it'd be cool to have, a place where people can visit, and then they can kind of like, we'd almost like have booths for each of the borrowers, so people can go in the metaverse, go to the booths, talk to somebody there, who are you, what do you do, why should we lend to you, what is the interest that you're paying, what do you do with the money, all of those questions, you can go there and do that. I think, from a Clearpool perspective, that would be, pretty cool to have that, exist. But yeah, from my perspective, whenever I think about the metaverse, I just think about the book Ready Player One. I can't get that vision out of my head. That's kind of like my idea of the metaverse, and that's probably where it's going. Quite honestly, down that road. Obviously, at the moment it's mainly gaming, but ultimately, I think a lot of other things will come to the metaverse. I think maybe we'll live in a world where kids go to school in the metaverse, or many other things that we do in our daily lives. We'll be able to just do in the metaverse. But I think if that's what we have. Then I think, why not have some sort of like kind of virtual place where people can come and see what we're doing at Clearpool and meet our borrowers and get all the information that they need. I think that would be pretty cool. To be fair, we could probably do that already. We were at, I visited one of our investors is Hashkey Capital. They did something in Decentraland a few weeks ago, and I went along and took a look, and it's really cool. And I'd spend a little bit of time in Decentraland, maybe like 6-12 months ago, and didn't really think there was much happening. But now I think it's it's a lot different. There's a lot more stuff there, and it was really good. So I think actually we could probably do something like that now, and maybe we will. But it's definitely an exciting space.
For sure. Rob, Alessio, thank you so much for joining me today. I'm looking forward to the launch of Clearpool in January. I appreciate you guys taking the time to join me today.
It's been a pleasure. Thank you. Thanks, Tony.
Thanks for having us.